Your 30s are funny. They sneak up on you. One moment you're still figuring out how to file your taxes without Googling what's a W-2. And the next you're sitting at your kitchen table, staring at bills, wondering how life got this expensive. Your body wants more sleep. Your friends are suddenly into home loans. And your bank account? Well, it's trying to keep up with everything: rent, investments, kids, vacations, and that one leaky faucet that refuses to quit. Here's the truth: your 30s aren't the time to figure money out. They're the time to get serious about it. The decisions you make in this decade will either build your freedom or chain you to stress for the next 30 years. My name's Alex, and I teach people how to build real wealth without losing their sanity in the process. If this sounds like the financial therapy session you didn't know you needed, hit that subscribe button and let's get into it. Debt is a thief and it's living rent-free. By now, most of us have made peace with the fact that debt is part of adult life. Student loans, credit cards, car payments, the usual suspects. But in your 30s, it's time to evict them. Consumer debt doesn't just cost you money, it costs you options. That $600 car payment? That's your future investment money. That credit card balance you've been meaning to pay off? That's your peace of mind. Think about this. $1,000 a month toward debt is $12,000 a year. That's $120,000 over the next decade, not counting the growth if you'd invested it. So yes, paying off debt isn't just smart, it's the fastest guaranteed return you'll ever get. 2. Your credit score is quietly running your life. You might think your credit score doesn't matter much until you buy a house. Wrong. It affects your car insurance, apartment rentals, even job opportunities in some industries. An 800+ credit score doesn't mean you're rich. It means you're disciplined, and banks love that. A small interest rate difference of 0.5% on a $400,000 mortgage can cost or save you over $50,000. That's the price of just okay credit versus excellent credit. The golden rules: pay on time, use less than 30% of your available credit, and don't play musical chairs with your accounts. 3. You need a 30-year game plan. Your 20s were for exploration. Your 30s are for execution. You can't afford to wing it anymore. You need a plan, one that covers everything from short-term goals to your 60-year-old self. Start with what I call the LIFT framework. L, lifestyle goals. What kind of life are you building? I, investments, income streams. F, family planning, protection, insurance, kids, dependents. T, taxes, tracking, where your money actually goes. Without this, you're just reacting to money instead of directing it. 4. Your emergency fund is freedom. Money? In your 20s, 3 months of expenses sounded reasonable. In your 30s, double it. You've got more to lose now: a home, a family, responsibilities. Life doesn't ask before it punches you in the face. A job loss, a medical bill, a car breakdown, these things hit harder in your 30s. 12 months of expenses in a high-yield savings account isn't paranoia, it's protection. 5. Retirement isn't far away. It just feels that way. Retirement sounds like a distant dream until you realize your 40s are right around the corner. By 40, aim to have 3x your annual salary saved. Seems impossible? Start anyway. The magic isn't in how much you start with, it's in how early you start. Compound interest is like a loyal employee that never takes a break, but only if you hire it early. 6. Lifestyle inflation is the silent killer. You get a raise and suddenly your taste in cars, restaurants, and vacations upgrades. We've all been there. But here's the truth: every time your income grows and your expenses grow right alongside it, you've traded freedom for fancier stuff. Automate your raises. If you earn more, invest more before you see it in your checking account. That's how people quietly become wealthy, not by earning more, but by keeping more. 7. Estate planning isn't morbid. It's mature. You don't need to be rich to need a will. If you have kids, assets, or even a bank account, you need a plan. A will, a power of attorney, and a beneficiary setup aren't just paperwork. They're love letters to your family saying, "I've got this handled." 8. Health is the hidden investment. You can't earn, grow, or enjoy wealth if you're constantly exhausted or sick. Your 30s are when bad habits start compounding, just like interest, but in the wrong direction. Invest in your health like it's a retirement account. Exercise, eat real food, sleep properly. Preventive care costs less than medical bills. 9. Your kids' future starts now. If you plan on having kids start thinking about their education early, even $50 a month in a 529 plan can grow into tens of thousands by the time they're 18. You're not just saving money. You're saving them from starting adulthood buried in debt. Confidence perfection. The goal isn't to have it all figured out. It's to understand enough to make calm, confident decisions. Financial confidence means knowing where you stand, what's coming, and how to adapt when life changes, because it will. Your 30s are your financial launch pad. You're earning more, yes, but the stakes are higher. Get intentional now, and your 40s won't feel like a financial firefight. Remember, small, consistent actions compound. Not just in your bank account, but in your peace of mind. So pick one area: debt, savings, credit, investing, and start today. Because the best financial decision you'll ever make is the one you don't keep putting off.